Hi everyone, your daily 10-minute business and finance news wrap for this Friday, the 9th of July 2021. Later, the impact of those tighter restrictions in Sydney on the share market. But first, to Australian banks, which are offering new support measures to customers, both personal and business, impacted by lockdowns. I spoke earlier with Anna Bligh. She's the CEO of the Australian Banking Association. And I first asked her what she thought of the new and tighter lockdown restrictions in Sydney.
What I think we're getting a much better understanding of is the prolonged impact of lockdowns. We're seeing in some parts of the country that have had recent lockdowns, such as Melbourne, that the recovery is just not as quick as it has been in the past. And there is a prolonged period where businesses, really struggle sometimes to get back on their feet and to get customers back through the door. Clearly, businesses in areas like Sydney that are under current lockdown and now an extension on that lockdown, it's very tough for a number of them. I should say that, the Australian economy, we should acknowledge, is doing very well. It's in good shape. But in pockets where there is impact from these lockdowns, whether it's border closures affecting tourism towns, lockdowns in capital cities, or even just the recovery from them, it's for those people who are doing it tough, they're doing it very tough.
Can we go into detail about the three specific support measures from the banks, right? So first of all, what kind of business banking repayment deferrals will be offered and to who?
So what we'll be offering, what banks will be how they'll be supporting their customers for small businesses. And by small businesses, generally we're talking about businesses that have less than $3 million worth of outstanding loans. They'll be offering deferrals on those loan payments for up to 3 months. This will be available to those businesses. They don't have to be in lockdown. They just have to be able to show that they've had some impact, a significant impact from a lockdown. So, it might be that a tourism operator in a small regional town that's not in lockdown is impacted because state border closures meant that they just didn't see, in their peak school holiday period in July, they didn't see the visitor numbers that they would normally expect. It might be in a city like Melbourne, again, not in lockdown, but a very slow recovery and still feeling the impact from recent lockdowns. So those businesses where they have been impacted will be eligible for up to 3 months deferral on their business loans.
Okay, what about support for everyday banking? What kind will there be?
Well, one of the costs for small businesses is obviously their loan repayments if they have a loan. But for others, or for all small businesses, they all use EFTPOS terminals. We're all familiar with, tap and go. One of the business costs that they incur is generally they rent those terminals from banks and other providers. And when you make a transaction, there is a small fee for every transaction you make. Banks will be offering those businesses who are struggling a 90-day or 3-month waiver on those fees. So their fees they won't have to pay for that period of time. Again, it's another business cost, and if you can take that out of the equation, that's a good thing. Secondly, for those businesses that are larger, banks will be able to offer them support. But because they're generally larger and have much bigger loans and often quite complicated loan structures, they'll have a much more detailed and rigorous assessment. It'll be on a case-by-case basis for those bigger businesses.
And finally, home loan customers, for those struggling, what are the banks offering?
Well, clearly, when customers are not able to be doing their full hours, or in fact not getting any revenue or any pay at the moment because of lockdowns, they may well start to have trouble meeting their monthly repayments on their loan. Banks will be offering to those home loan customers deferrals on their home loans on a month-by-month basis. So it is important if people are struggling, if they're starting to feel the pinch, don't wait till it's too late, talk to your bank. They stand ready with many measures of support that they're real, they're practical, and they can make a real difference if you're struggling financially.
And finally, last time we saw that there was a broad-based assistance. How will that assistance happen this time? Will it be for everyone? To what extent will it be case by case, for example?
This package is more targeted. It is available to those who have been significantly impacted, as I said, by either a current or a recent lockdown. And so banks will be asking you to give some demonstration of that impact. Of course, your bank also has your transaction record, so they can see in your account if you are not receiving your pay or not receiving any revenue if you're a small business. So it won't be a particularly onerous assessment, but there will be an eligibility requirement that wasn't there last time, and that is some demonstration that you've been impacted by these recent lockdowns.
Anna Bligh there, the CEO of the Australian Banking Association. To the Australian share market now, which did fall. It was down as much as 1.6% today, but closed down 0.9% to 7,273 on the S&P ASX 200. Unsurprisingly, because of the tighter restrictions in Sydney, travel stocks declining. Webjet, one of the worst, down 5.7%. Also saw a pullback in technology stocks. Zip off by 5.5%. Viva Energy was the best performer on the 200, up 5.1%. And we also saw a bit of a hit on the Australian dollar, 74.2 US at the close of trade this Friday. That's an 8-month low, and it's on the back of fears of a slowdown in global growth because of the spread of the Delta variant of COVID. For more, I spoke earlier with Anton Tagliaferro from Investors Mutual.
Well, obviously, we've had a bit of weakness overseas overnight, in the major markets, but plus also the COVID lockdowns in Sydney obviously don't help sentiment, particularly, given that we don't have the JobKeeper this time. So it's a bit uncertain as to how it will impact on various businesses' profitability and how long it will last.
Can we go into that in more detail? Because the general headlines for general news at the moment is all about the extension or the harsher restrictions in Sydney in terms of the lockdown. Investors, do they care? And is that being reflected in the market?
Look, again, on a day-to-day basis, obviously there's lots of news always crossing the wires, But look, as I said, in terms of sentiment, and bear in mind, the Australian market was close to record highs anyway. So look, it was probably due for a pullback. And I guess this Sydney lockdown just creates the uncertainty. Will Melbourne be next? Will Brisbane be next? When does Australia finally get out of this situation? As many major economies around the world seem to be now emerging from it. So I guess there's that uncertainty. From a longer term point of view, does it really make a big difference to companies' valuations? Probably not. But in terms of sentiment and in terms of short-term profitability, sure, it has an impact.
The Australian dollar, it's at its lowest point so far this year. Why? And surely that must please at least the RBA, which has been saying that consistently that the next increase in interest rates won't likely happen until at least 2024. What's the market thinking?
So look, the Australian dollar, again, it's a currency rate is a reference between two currencies, and the Australian dollar has been weak mainly because of US dollar strength. Because if you look at the Aussie dollar versus the euros, it's relatively stable. They're at 0.63 or whatever. So look, the lower dollar is actually good news for Australia. It helps all our exporters, helps all the resource companies. Also, companies with international exposure like Amcor, like Orica, etc. Obviously, from a translation point of view, it's a plus. So look, a bit of weakness in the Australian dollar is a plus, if anything. It's not a negative. Although, having said that, in the short term, it may cause some overseas investors to panic and sell out of Australia because they see a bit of weakness. But generally, for major companies, it's good news.
Is there a genuine concern that global central banks will start withdrawing stimulus a bit too early? We've seen the RBA this week also talk about slowly beginning to taper and the implications that will have for markets.
There's so much stimulus in the system at the moment. Not only do you have zero interest rates, but you have and you've had huge fiscal packages. You've also had central banks pumping money into the system, buying government bonds. So, look, I think the removal of stimulus is only a matter of time. We've seen, all economies around the world, including Australia's, recover pretty well from the worst of COVID. So, look, the stimulus has to be withdrawn. I guess markets will from time to time be concerned as to how quickly that'll happen. But the truth is everybody has to expect that to happen at some point. And yes, that'll cause tremors here and there. But again, I think central banks are very, very mindful of not doing it too quickly. And again, if anything, we do need a bit of tightening, I think, to see some common sense coming back to to some asset prices. I mean, some of those tech stocks you mentioned, some of those stocks you see in the US, the GameStops and all that sort of nonsense, a lot of that is being caused by excesses of free money around, you know, and at some point that will end.
And just finally, in this environment, how does someone like you invest?
Look, the funny thing is, even though the Australian share market's at a record high, etc., and there's, you know, there is a bit of caution, and there is reason to be cautious, as I said, because of all the stimulus. You know, we still find very good value in the Australian market. So things like companies like Orica, for example, which produces explosives around the world, it is a beneficiary of a lower Australian dollar, not just because it helps them compete with any imports into Australia, but also when you translate their overseas earnings. Incitec Pivot, you know, is another company which benefits the same. So there are pockets of value there, and particularly those companies that have exposure to the overseas economies, which are recovering very quickly now, particularly if you look at what's happening in the US and parts of Europe. You know, they are recovering pretty quickly to their pre-COVID levels.
Anton Tagliaferro there from Investors Mutual. Don't forget, you can listen to SBS on the Money as a podcast on the SBS radio app, Spotify and Apple Podcasts. Follow me on Twitter, Instagram and TikTok at Business Ricardo.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.